The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 15th Tax Day, marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call Fool Me Once, Fool Me Twice. Well, folks, you know the rest of the story, right? Look, no matter how much we prepare for one turn of fate, something will sneak up when we're least expecting it. You know, when that time comes, the people who triumph over the unanticipated are the people who are ready to adapt. Now, I know a story. A wise old gentleman used to dine every month in the club and sitting at the table covered with a white linen tablecloth with silver candlesticks, served by tuxedoed waiters. After dessert was served, he would launch into as many stories of, did I ever tell you, when, about, and so on. And it would go on like that. And the cool thing was that no two stories were ever alike, and there was always a wealth of wisdom through example, a motherlode of remarkable instruction. All you had to do was listen. A man who was so old, so wise, and so flexible, he had but one ironclad rule. He said, if a man fools me once, I think, that's not nice, and I remember it. If that same man fools me a second time, I think, shame on you. And if that same fella tricks me a third time, well, I've been warned, and I should have changed my ways and didn't. So shame on me. If you're not changing your responses to the situations and circumstances that make up your life, you're not being flexible, and you're throwing away the greatest asset that each of us have. We can't control the events in our lives, only the way that we adapt to them. None of us knows which card fate is going to deal out, but we always control how we play those cards, folks. Let's go check out the cards and the fate in the marketplace. Right now, we've got the Dow futures off about 50 points, trading out at 14,733. ES Mini S&P futures down at 1574, off almost 8 points. NASDAQ futures off 11.5, trading out at 2834. Our call-in number is 877-927-6648. Of course, the story of the morning is the commodities, just a continuation of Friday. Right now, gold trading out at 14.13. That's down 87 bucks. Silver off 9% here right now, down $2.40. Trading out at 23. It's on its way to 17 bucks. Gold on its way to 12.70 out there. Light sweet crude, that's trading down $2 out at 89.29. Across the pond here over in Europe right now, we've got the DAX trading off 45 points. The FTSE off 55. Over in Asia last night, it was all red. You had the Nikkei off 209 points. That was the leader, down 1.5%. The Hang Seng not far behind, off 316 points. That was down 1.4%. And the laggard, the Shanghai, down 25 points, over 1%, about 1.1% out there. If you are listening in on your radio or your mobile device at tfnn.mobi, remember, you can always watch the live stream of the show. You can go to the homepage of tfnn.com. Over on the right-hand side, you'll see a button with 3 little smartphones. Click on that. click on that button. This show will stream live to you. That way you'll be able to see these charts here, and you can always catch the archive on Channel 9. So let's start off taking a look at the commodities marketplace. We had bulls showing up for work here at different times of the morning. Let's first start taking a look at gold. We'll go ahead and pick this apart. We're going to start off with just simply the short-term chart out here. We can see gold making a low this morning. We're looking at a 30-minute chart, so in that 6:30 time frame between 6 a.m. and 6:30, down at 1385. You may remember 1535. That was the supposed to be the support point for gold. Of course, gold smoked right through that on Friday with accelerated volume, nearly the same volume in contracts as that swing point had. Enough to certainly go ahead and break that consolidation. That's a 265-point consolidation. That's how we come up with that number 1270. But there's multiple ways, so we're going to see how multiple patterns simply generate nearly the same number out here. But on the intraday chart, what you can see, certainly gold getting into that oversold condition, and now you had the bears, really first time the bulls really showed up for work here right about 8 o'clock this morning. They built this little hammer candle if you are watching us on Tiger TV. So you've got one low down here at 1385, the low of that hammer candle a bit higher out at 1398.90. Be careful once you see the break of that hammer candle. Yes, you will see, and what you can see here is all that's really going on so far. You know that when you get into an overbought or oversold condition on the intraday charts, on any charts, that condition must be worked off. It's going to be worked off either by bouncing higher, in this case here when something is oversold, or just simply moving sideways. This has been doing just a little bit of a sideways to higher move out here, but I don't think that this story is over. There is a hammer candle again. You can be watching that price point, $1398.90. We're using a 30-minute chart out here. Let's go take a look at silver and light sweet crude. Then we'll go take a look at the larger term charts out here. We'll take a look at the daily, weekly, monthly, or anything else that you'd like. Just give us a call at 877-927-6648 as we take a look at silver here. Silver also during that 6:30 a.m. session getting down to a price level of $22.92. Now it made a three-candle reversal signal out here coming into the 7 o'clock session, created a little morning star, so support here on the 30-minute chart. It was the first time that we saw really any bulls really show up in this little commodity sector here in silver was during that 6:30 to 7 a.m. time frame. So you've got support here on the intraday chart. Of course, you can see silver moving down into that extreme oversold territory and making that morning star. That says your earlier 30-minute support line is the $22.92 range out there. Watch that level as it gets attacked out here. Let's go take a look at crude here. Light sweet crude trading out right now. Where is it on my chart here? Trading out at 89.25. As we pull that back, you saw the bulls come out in light sweet crude at 7 a.m., forming a little bullish engulfing candle. Of course, what we see here in light sweet crude, we do see also that working its way out of that oversold condition. You can see it did it very quickly here. That condition has been worked off. That says the selling pressure inside light sweet crude can continue. The selling pressure inside gold can continue. The selling pressure inside silver can continue as well. Of course, we'll just go ahead and pull up the ES Mini here real quickly on the 30-minute chart. The ES Mini, let's go ahead and pull this back. Let's come off of that Jobs Friday set of swing points out here. Those are the swing points on the 30-minute chart we want to be paying attention to. That's at the price low of 15.33 and a quarter. That's the low. You want to take a look at the high out here. Came in at 11.30 on April the 11th. 15.70 is your .382 retracement. That's nothing. 15.70. You know, you had a move down on Friday. Of course, that moving right to about $15.70. What was it? The low here coming in at 15.71.75 at 4:30. No, that's not what I wanted to look at. It was. Let me a second here. I got to get my days straight. It's the 14th, right here. The low coming in. I apologize. The low came in at 11 o'clock in the morning on a Friday, getting down to 15.75 out there. If we take a look at what that was nothing more than a .618 retracement off of a swing point. You can see in the swing point that we're looking at here would have been the 9 a.m. time frame on April the 10th. 15.75, 50 would have been the exact number. You can see you get down into an oversold oversold condition. You moved down into a 0.618 retracement. You also did an A to B equals CD down. You did the whole mother lode. There's your A point, your B point, your C to D, and you can see an A to B equals CD down that it completed out there as well. So you got your patterns. Then what happened is we saw the market simply work off that oversold condition, and then obviously in the early morning, not obviously, but in the early morning hours here, we've seen pressure. We've seen price move down. We've seen it get down into that, 30-ish level in that RSI indicator. You want to make sure that you are just simply utilizing this. Now, you got to understand candlestick patterns. You need to understand other patterns that are out there as well, but certainly you want to understand on an intraday basis. Well, you'd like to. I suppose you'd like to. If you're trying to understand what the markets are doing and you want to be able to read the EKG, the breathing pattern of the markets out here, go ahead and add that indicator, apply it to the charts, apply it to your trading tools out there. I think you will be amazed. So right now here, inside the ES Mini, 1570 has not been attacked, but it's really the 1570 is going to be important. Why? Because it's going to be that 1576 area on the S&P cash where we're really going to get a release of information. If we see the market move down below 1576 on the ES Mini, you'll see 1556 come into play. That is nothing more than a normal retracement off of the low from Jobs Friday, off that low of 1533 all the way up to the high at 1593 out there. Now, let's go and take a look at the longer-term chart here inside Goldilocks, silver, and the light sweet crude. So let's go take a look at this. We'll go ahead and pull up the weekly chart of the continuous contract out here. Now, this, folks, this is the beauty of a chart. On the upper portion of the chart here, I've got marked each of the QE dates. QE1 occurring on November 25th, 2008. We can see that put in a fairly significant low inside the gold complex out here. There was a slightly lower low made the following week. That low that came in the following week after the announcement of QE1 came in at a price point of 741.20. QE2 occurring on August 27th, 2010. That also marked a low. Operation Twist, didn't do a tremendous amount to gold, not like you saw in QE1, not like you saw in QE2. And you take a look at QE3 out there. I know there's all the talk out there about how the Fed is pumping money out there, and that's just simply going to drive commodity prices higher. But if you take a look at QE3 coming in the week, or coming in on September 13th, 2012, the high of that week was 1780.20 in gold. You haven't seen that high. You saw maybe a little bit of sideways move for about 3 to 4 weeks of a time period. Actually got up in September, the week of September 28th, up to 1785. That set up, as I pull this back here, that set up this horizontal area of consolidation. That's your 265-point move. Go ahead and just simply subtract 265 from your 1535 level. That's what's going to take you into that 1270 number. That would be 1270. Well, if you just take a look at A to B equals CD off of the highs in gold from September, the week of September 9th, out at 1923.70. That's your A point. Your B point is the low on December 30th out at 1523.90. Your C point on this is the high during that QE3 or shortly after it out at 1798. 1-to-1, that was hit already this morning. That was 1399.70. The 1 to 1.272 takes you to 1290. That is where gold is headed. Who knows? It could get there sooner than later. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Dow futures off about 32 right now. We'll go back to the weekly chart that I've got up here for gold. A lot of what I heard on the news was that all of the pressure that we're seeing on gold here was Cyprus actually deciding to sell all of their gold in order to take care of being able to get some liquidity in their country. And I am the type of person that always likes to go back and verify anything that I might hear that might really be something worth consideration. So I did some work over the weekend. You guys can locate this information as well. But the best of my information showed that the country of Cyprus, guess how many ounces of gold they have in their country? Guess what? 417, let's call it 418,000 ounces of gold, about 32 tons of gold out there. No, 13 tons of gold out there. 417,000 ounces of gold. You realize the value at $1,500, it's at 14 right now, was around 620 million or so. Folks, futures contract wise, that's like 4,000 contracts. Cyprus has nothing to do with this. Nothing to do with this massive selling at all out there. So anybody who reports that on television, all you got to do is a little bit of work. It took me probably, 30 minutes worth of searching and verification just to be able to find that out. So in any event, just do the homework yourself. Now, and speaking of doing homework here, as of Tuesday, if you're looking at the middle portion of my chart, you'll see a little red squiggly line going across that. That is the commitment of traders. That is the commercials. Now, the commitment of traders, the CFTC, they release a database of numbers each Friday, usually by about 3 p.m. It covers all the transactions through the prior Tuesday. So through Tuesday of last week on Friday, I got all their information. If you wanted to take a look at what the big money was doing, the easy way inside the metals marketplaces, take a look at what their net short position is as a percentage of the open interest. And all the way back here, and this is the large commercials, they take a long time in order to be able to put their position together. They're big ships. They're big money players out there. They can't just move on a dime. It's not like you and I in our boat, in our power boat. We can turn on a dime out there. Well, they were putting together the largest net short positions back in the early part of February, middle of February. The same type of positions that were put on all the same type of net open interest, net short position of open interest that we saw all the way back here in 2008. So be very interesting to see what their position is, okay, because that is the they were taking the largest net short position going all the way back to 2008. So the commercials, the large commercials out there, they were betting on a nice bottom inside gold. It wasn't Cyprus that was selling. It'll be very interesting to take a look at the COT report coming out this Friday, as I say, about 3:30 in the afternoon, and seeing if it was the commercials that were also getting on board and saying, you know what, we're on the wrong side of the trade, because big volume out there. I don't think it is done. We can just simply take a look at the patterns out here. Yes, you see gold and the weekly chart, monthly chart, however you want to take a look at it, completing a 1-to-1 A to B equals CD at $13.99.90. Right now you've got gold trading out at $14.0840. Gold likes to expand a little bit beyond that, and so the 1-to-1.272 at $12.90, and the mere fact that you broke a 265-point consolidation. Now, I didn't expect to see it occur so quickly, but for gold to get down to $12.90, if you think people are yelling about it now at $1,408 out there, just wait till it gets to $12.90, $1,300. People will say the market is over. I say that is likely the time where you want to be taking a look at stepping into gold. It is not right here. It is not right now. Now let's go take a look at silver. Inside silver, we're going to see really the same thing out here. Let's go ahead and put up the weekly chart on silver. I've got the daily. Let's take a look at the weekly chart on silver. The weekly chart on silver here, what this shows is a nice Gartley buy pattern at about $17 and change. Right now, if you're looking at my screen, it says $17.35. Don't be paying attention to the exact number out there, but that would form a nice Gartley buy pattern. If we take a look at the actual retracement here on the weekly chart, off of the lows from October of 2008, all the way up to the highs put in at $49.82 back the week of April 29, 2011, you can see that right now you've got silver below the 0.618 level, which is $24.22. Not that much further below. Looks to me like silver, though, wants to head to that $17 mark. That's nothing more than the 9-point consolidation range that silver broke through slightly on Friday and big time this morning. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view TigerTV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 72 points out at 14,792. S&P off almost 10 points out at 15,79. We're on 15,76. Watch out here. So far the low intraday 15,78.97. 15,76.09 will get tested. The composite down 17 points right now, trading out at 32.77. Small caps off 6.5 points, trading out at 9.36. Google off $2. Apple off 3 and change. Microsoft down 15 cents. Intel down 9 ticks. Since Cisco off 8. Let's see, lead the charge to the upside. I got to kind of brush through all of the direction shares, the gold short, the silver short. But you got Life Technologies up $5.40. I believe that is a buyout by Thermo Fisher out there. So you got Netflix is the leader, stock-wise, individual stock-wise, in the clubhouse, up $4.80. You've got Theravance up $2.87. That's up 12%. National Financial Partners up $1.60 out there. Sprint up $1.08. That's on a buyout. Citigroup out with numbers this morning, beating results. Citigroup up $1 right now. That's up 2.5%. Under Armour, they're going to be out with earnings this week. They're up 79 cents, up 1.2. It really is. Earnings really starts in earnest, I believe, tomorrow. Tomorrow or Wednesday, we'll start seeing all of these companies start releasing their numbers. So big week here for earnings. You've got on the downside here, let me get through all the power shares. You got Rand Gold Resources, GOLD, that's off 7% this morning, $5.32. You got Apple down $3.39. Royal Gold, RGLD, off 8% this morning. Anadarko Petroleum off $2.43. Open Table is down about 4%. That's off $2.26. Our call-in number is 877-927-6648. Now, this is a thing of beauty out here. Here is the U.S. dollar, Japanese yen. The 3-drive to a top pattern has worked here. The actual 3-drive pattern really completed well. There was time-wise, we were taking a look at April the 10th out here. Actually got a little bit of a higher high on April the 11th out at 99.93. So we are now starting to see a bit of a pullback in the U.S. dollar, Japanese yen currency pair. Now, these 3-drive to a top patterns, these things are very important. You know, when they fail, boy, it really tells you that you've got a strong trend that is in place, whether it's to the top or the bottom. When light sweet crude was making its high in the $140, $145 range out there, it also made a 3-drive to a top pattern, and we saw $40. Well, we haven't seen $130 since. I'm not saying that's what's going to happen here in the U.S. dollar, Japanese yen, and I don't suggest you going short this currency pair. Let's just watch to see how this thing trades back, where it trades back to, when the kind of patterns, which you'd really ultimately like to see here inside the U.S. dollar, Japanese yen. You'd like to see it form an A to B equals CD down. That says it's got a bunch of work in order to be able to do that and buy that A to B equals CD down. When at that D point, you see the bulls step in, because it is one heck of an A to B leg out here. We're talking about going really all the way down from the lows here back in September of 2012 out at 77.12, really almost making a straight line run up to almost par, up to $99.94 out there. So you're just simply looking for a nice pattern on the way back, and the best pattern that you could we could see here on the daily chart would be an A to B equals CD down. If we go take a look at the euro, see what's going on inside the euro out here. The euro is running up into its resistance level. Again, that is nothing more than the dead cat bounce area, the 0.382 retracement from high to low, that high being the February 1st level out at 137.09, all the way down to the low that was put in on April the 4th out at 127.44. You've also got this black horizontal line, which used to be resistance, then really did not work as much of a support area, but still seems to be working as a resistance point out here. Candle-wise, nothing really to report on in the euro-U.S. dollar currency pair. Let's go take a look here at the Great British Pound. Great British Pound U.S. dollar just pulling back slightly today, testing its resistance line now, or support line, I should say. What the Great British Pound U.S. dollar did do was it made a dead cat bounce. It made a 0.382 retracement almost to the penny. That's where you start to let folks off of the elevator out there. Plenty of folks will go ahead and trade these Fibonacci numbers out there. Why not? Use them to your advantage out here. It does look to me like the Great British Pound U.S. dollar wants to make a move, probably a move as high as 1.576 out there. That's got a ways to go. The next stop on the way up is 1.5461 out here. That's your 1-to-1 A to B equals CD up. Now, of interesting note out here is the king. If we take a look at the U.S. dollar index, in fact, let's go take a look at the weekly chart. Here's the weekly chart of the U.S. dollar index. You know, what is in play here is this 0.786 Gartley sell pattern. We were taking a look at, I certainly was taking a look at the descending trend line coming off of the June 11, 2010 high, $89.10. That was my first touch point out here. The second touch point was the July 27th high out at 84. $24.25. What we saw the U.S. dollar index do, quite frankly, was get up to horizontal resistance. That's this little red line that's going across my screen. That red line going all the way back to August 27, 2010. That also happens just out of coincidence. I'm sure it is just out of coincidence. That happened to be the QE2 date out there. I believe QE2 was, I don't know if it was the 27th, might have been the 24th or 25th, but certainly we're looking at a weekly chart. It was during the weekend at August 27, 2010. That lined up a small little bearish engulfing candle, but that level right there at $83.64 and change, a little bit and change, but that really set up a resistance level. We saw the U.S. dollar index tag that back in June of 2012 as it got to 83.67 and closed below it. We saw it back in July of 2012 as it got up to 83.99, closed back at 83.47. We saw it the following week, July 27th, when it closed back below. We saw that take place, quite frankly, 2 weeks ago. Got up to 83.66. So this is a formidable area of horizontal resistance for the U.S. dollar to be able to get through out here. You still have this 0.786 Gartley sell pattern in play. And what the U.S. dollar index did last week was it moved back inside the bottom portion of that range, of that descending trend line that goes all the way back to June of 2010 out there. Let's go take a look at some of these stocks here that are popping and dropping in the marketplace. Let's go take a look at a couple of these gold equities here. So let's take a look at Rand Gold Resources, GOLD. That's getting a little bit of the kibosh this morning here. So let's go take a look at that. It is gapping down. Let's pull this back. Let's see what kind of volume we've got in here. We can see here it is in the oversold condition, but at no bulls here in place. So what we'll do here is we'll put this on a weekly chart. Let's just put this on a weekly chart out here first, and that way we can pull things back a bit further. See what kind of. Well, that didn't really help. Let me load the default. Wow, what the heck happened there? Well, that's pretty interesting, folks. I can honestly say I haven't seen that before. So I had a little computer problem on Friday. Some of you may remember that, and that's pretty wild. So I can't take a look at that chart on the weekly basis. Hey, I could on the monthly, though. Let's see what happens on the monthly. There we go. On the monthly basis, a little bit easier. So on the monthly basis here, we'll take a look at Rand Gold Resource. Sorry about that. That is the weekly chart. I'm sorry, that is the monthly chart that we are looking at. And as we see, price right now out at $70.01. So let's go hunting here for bullish and bearish candles. Again, the ticker symbol here is GOLD. We can see it coming all the way back here into this swing point from March 31st, 2011. Many of you may recognize that candle as well as the candle here from the week of June 30th. So let's go draw the line across here because this is a hammer candle. You got two of them. So clearly we know where the bulls are hanging out on the monthly chart inside Rand Gold Resources here. You've got two hammer candles. It's very clear. Not only do you have that, you've got this little bull sash candle right out here from June 30th, 2012. That makes the May 31st, the prior month's low, a support level, and you can see right now. So the low here on Rand Gold to be paying attention to. Again, we're looking at a monthly chart out here. I would love to put the weekly chart up for you, but I'm going to have to clearly do a little bit of work on that. But the price point to be paying attention to is $70.18. Right now, trading at $70.14. Now, if let's go take a look at retracement levels. Let's take a look at the retracement inside Rand Gold off of the low here from October 31st. 2008. As we take a look at the low from which is a price point of $22.28 all the way up to the high of $127.27 on October 31st. The 0.618 level, I suspect that is where we'll see Rand Gold head to, is $62.39. That's only $8 away. It should have no trouble getting down there. Off $5 today. Just needs a couple more days of some intense selling. Now, some of these are really going to be some nice buys here, but it doesn't look like that is the case on Rand Gold. But you can see here that we'll find out whether or not the bulls are still in place here. These candles, they really help you identify where you've got good areas of support and or resistance out here. You can see even, I teach you that continuation pattern, the importance of paying attention to these wide-ranging bars as prices are traveling with inside. You can see a couple of different rising three candle formations out here. The first one, take a look at May of 09. Again, I show you this oftentimes on the intraday charts, on the ES Mini, on the 30-minute charts out here. But as long as I've got a monthly chart out, might as well show you how it works here on the monthly charts as well. We're taking a look first here at the May 31st, 2009. Take a look at how these bodies really traveling with inside this candle from May 09. As soon as you get a close above that, that's a continuation pattern. You then have another continuation. In fact, that's what it did. You went as soon as it got above the close here of 69.81. You then saw a run up to a price point of 90.30. Again, we're looking at a monthly chart. If you take a look at Randgold, it set up that same pattern again here during the November 30th, 2009 level. As soon as you got to close above 84.74, once you got to close above that, ran all the way up to a high of $106.44 out there. Not seeing any real continuation pattern to the downside other than breaking the hammer. And as you know, folks, if you are long, you are wrong when you see a hammer candle come in. Now, the problem here with Randgold is that when you break a hammer, and I say you're long, you're wrong, what that also means is that you're going to go down to the next level of support. Well, the next level of support from a candlestick standpoint, I don't see one. I really don't see one out here. Bullish enough candle formation out here on the monthly chart. That's a 62.39. That's just the 0.618 level, 44.75. Again, longer term chart out here, but 62.39 certainly in the cards for Randgold. Let's go take a look at Royal Gold, RGLD. So let's go take a look at that chart. We'll go ahead and might as well just start on the monthly charts out here. To see if we could see any kind of similar patterns. You can see this gapping down on the daily chart this morning, trading out at 55.67. It's got good volume behind it in only 17 minutes of trading. So let's go put this on a monthly chart, see what kind of candles that we can identify out here. This is taking on this little bull sash candle from the month of May 31st, 2012. So not a hammer like we saw inside Royal Gold, but certainly a bullish candle formation. So that low is $57. You're trading at $55.55 right now. As far as the next real candle of any kind of consequence would probably be this little bullish engulfing candle right down here from September 30th, 2009. Of course, that will take you all the way back into January 31st of 06 if it actually gets down into those levels. That's when you had Royal Gold trading out at the 41.66 to 39.05. So let's go take a look at some retracement levels out here. First, let's go and take a look at the next bullish candle formation, which would really be here off of these lows from September 30th, 2009. Let's put the line across the sand. Let's do it on both the top and bottom of the actual candle itself. So the top of that bullish engulfing candle is right here, September 30th. The high is 49.35. Should have no trouble getting down there. It's going to be that low that's going to be the key area to be watching, 38.57 on that. So it looks like that is where Randgold is headed to. No A to B equals CD down, just simply a straight line to the downside out here. You do have also a high volume bar on April 30th, 2009. So that's really right around the same price range as that bullish engulfing candle. But looks like that is where Randgold wants to move to. Let's try the weekly chart on this. To see if I run into the same issue here with this, and no, I don't. So I just had, I think what it is when I pulled up gold, I must have renamed. I have to import the COT data into my chart, and I must have imported the data as GOLD instead of GOLD COT. That's just a technical thing for me. You probably didn't even need to know that. But let's go take a look here at the weekly chart. You've got this little bullish engulfing candle that it's moving through here right now. That was from May 11, 2012. That low, $57. The volume there, that's a swing point. The volume there was 3.9 million shares already today, 589,000 shares. That's after doing 5 million on Friday out there. Lower prices, 877-927-6648. Dow's off 94. S&P 1577.09. We're waiting for 1576 to be tested. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, you've got the Dow trading down 87 points out here. S&P off 11, out at 1578. The low, 1576. 87. We're getting close. We need that 1576.09 level. That is the key number. You know, you've been hearing me talk about 1576.09 until you're blue or red or whatever color it is you like in your face out there. But that is the number we've got to be paying attention to. We had a big breakout last week over that 1576.09, a close above that on the weekly chart last week as well. With the Bears having every opportunity to prove last week that it was a false breakout. Nonetheless, we still need to be paying attention to it. We want to see that level tested whenever you break out of of any trading range that you're in. Typically, the market's going to come back and test it, whether it's a stock, whether it's a currency, no matter what it is out there. So now 1576.09 is going to be key. You break down inside it today or anytime here during this week, and that would be signaling you've got a false breakout to the upside. The key is you want to get the weekly moving with the daily. That means at the end of the week, if you were to close inside it this week, you'd want to see it close back inside it by the underneath 1576.09 at the end of the week. You do that, then on the weekly and on the daily, you would be having a false break topside. The only thing there that would be, your hat trick would be on the monthly chart closing back below 1576.09. Coming into sell in May, that is what we've got to be on the watch for out here. But one thing at a time right now, if we take a look at the XLF out here, XLF trading out at $18.45. That has been certainly a strong sector out here, and even this morning here, not showing any real significant weakness inside it at all. Let's see, 415 volume-wise, 6 million shares out there. So you've got some decent volume, no question about that in 26 minutes of trading, but it is not really to the downside, just having a sideways move inside the financial sector. If we take a look, it's not the same to be said inside the energy sector here. The energy sector getting back inside that September 14th swing point. Really closed just slightly above that on Friday. That swing point low is 76.02. Swing point high 77.35. Energy sector, the XLE closes below. I would say we'll use the candle here from the day of February 26th out there. That's 75.46. That would be saying, look out below, and look out below inside the XLE. That'll take you back to the January 2nd, December 31st gap up level, anywhere from 69.57 to about $72. Right now, trading at 76.45. Has not tested the low of that September 14th area out here. Let's see, what haven't we touched on this morning? Oh, bonds. We haven't taken a look at bonds here. Let's go see what bonds are doing. Bonds really right now just having a sideways day. However, bonds do want to make a move. Well, I'm calling for the 149 level, but if this is an A to B equals CD up, we're talking like, ouch. We're talking on the A to B equals CD up, folks. It's not even a .382 retracement out here. That would actually say you would be looking at bonds at the 153.21 level, maybe 155, because with doing a less than .382 retracement, that sets up a large A to B equals CD. But one thing at a time out here. Let's see let's go take a look at the ES Mini here real quickly before we go off the air. Still not being able to get down to that 1570 level. That should not be a stretch for it to get down there. That is only a dead cat bounce, and it has only gotten down to a low of 1571.75. Folks, if you're off to start your day, have just simply a marvelous Monday, and thanks so much for being here. Always remember, you have an amazing power within yourself, and that power is so strong it will create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday, folks. Look forward to seeing you soon. Take care.
Let me tell you something, folks. I had people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to mastering probability today, because your journey to extraordinary rewards is just one click away.